Good afternoon, ladies and gentlemen. How's everybody doing? It is once again I, Lord IBO Hards, and you're watching CORP Exchange Television, and this is a HEJSPAN segment, and we call this one the hedge. It's part of the HEJSPAN survey. For those of you who don't know, HEJSPAN it's like not a publication, but it's like a group organization that has a publication that follows hedge funds on CORP Exchange and does the research and consulting for a few small hedge funds, and we also helped start a couple of those hedge funds. So we're looking at the government regulation. Back in 2009, there was a lot of regulation, a lot of fear of government regulation that was going to really thwart the business. So we're looking back from 2010 to 2020. And, mainly around hedge funds, when you're talking about regulation, you're talking about accounting and taxes and, the business consultancies, how you can advertise. Back then you couldn't advertise. It was frowned upon. Now you can advertise. You could even trade your company as a fund. That's neither here nor there. It's just how you approach the business. Change in finance is inevitable. So, a couple of questions were asked in the survey, and one was, what do you think about the government regulation? Has it gone too far? Will it achieve its goal? A lot of fund managers on the exchange, one being Bohovowitz Management, which I sit on the board of, were really concerned about that when we first started the fund, or when we first initiated the fund on the exchange, because for the smaller fund, you have classes. So you're looking at the funds, there's classes. So they were saying, it's the biggest threat, the new regulation that was coming in, or the regulation that was said to be coming in the 2009 era, was the biggest threat for the industry. The cost of complying with the new regulations, and whether you had to do extra reporting to reveal about your trading strategies, might actually drive the business into the ground or drive it offshore. So the concerns are real. Any regulation or legislation that hits the financial industry is real. Most of the regulatory is on this, is mainly on the tax side. How much you should be paying the taxes, how much you should be charging, whether or not you should even be in business. It's a disruptive. It could be disruptive when operating this type of business, being the hedge fund, but it's just processing the information and distributing it properly to your associates, your apprentices, all the people that you're involved with, your third-party administrators. It's always good to have a third-party administrator. People like to say, you don't want people in your business. Blase squadsy. When you have the third-party administrator, it's like a referee. It's like a judge. They can come in and they're not taking your side, or they're not taking the client's side, or whatever business you're doing. Whether you're dealing with a lawsuit, whether you're dealing with bringing in more money, bringing in raising capital, or looking at new legislation. They just tell you, this is how it is. This is what the rule is. And how close you are to the sideline. It's not like, well, we can help you do this to do this. The third-party administration is not there for that. It's not a biased situation. It's there to just keep things fair and simple, and that helps with your track record and growing your fund. The Sarbanes-Oxley, that's another question. What do we think about Sarbanes-Oxley? And they said it just post Enron, it just went too far. It just went too far. To improve the internal the control structures, without having to go outside of your fund to outsource third-party administrators and stuff, it just drives up the cost. But I would argue the legislators are looking at the hedge fund is not a mutual fund. It's not a family office. The hedge fund is just strictly money. You're dealing with big money. You're taking on big risk. You have a lot of rope that you can hang yourself with, for lack of a better word. So when you're dealing with the hedge fund industry, it's just the cost. If there's an extra cost, it's just the cost of doing business. You're in a position where you can make money really fast. You're supposed to be in an industry, participating in an industry where you only solicit or you only get in bed with certain type of investors, angel investors, accredited investors. You're not going up to people like someone off of the well-off fund or one of the fund bars and saying, hey, guess what? I can help you better your money. You're working a 9 to 5, blah, blah, blah. You're going to people and you're saying, look, I can make you 13% this time of year, da, 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 da. Do you have $10 million? Versus, hey, let's sit down at your table and give you a financial needs analysis and I can help you make some money or save your money. It's not just two different mindsets, it's two total different entities. So, we're looking at more like consulting firms. That's where we came in. Like, we're more of a consulting firm at IZ Corp Exchange. And we gladly started offering hedge funds compliance, evaluations, controlled internal evaluations, and financial service reports. And they love it, even though if there's a fee associated with it. They like that because the hedge funds are small and they're growing and they're always looking for positive input. We have a whole slew of services and involved with consulting that you can do. And again, a lot of times, we'll outsource to people. So we'll come in, you bring in your fund and, you put it on the exchange, you get the package, you're advertising, blah, blah, blah. And then, not blah, 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 but you're advertising, you're getting exposure, and people come to us and they say, well, we want to talk with them. So, the information's there, you talk with them. The hedge fund comes in and they say, well, they want tax auditors. So we don't do that. What I'm saying? They want us to do their money, but they want a separate tax. They want to do their own tax, and they don't have people that do that. So then we outsource it. I would outsource it to Suit Advisors, a member of IZ Corp Exchange in good standings that does tax structures for businesses. There's always the level of due diligence is always going to go up, like the quality of life in the community. A lot of people don't like change. You don't have to be a Renaissance man. But you have to understand the level of due diligence for investors is increasing, and it's going to increase dramatically. You don't want the main one, insider trade. You don't want to be in non-compliance, because that's just bad. Even if it's a little hair off, and you say, oh well, we don't have to do that. No, you want everything to be above water. You want all your I's dotted, all your T's crossed. And you want, even if you're not a big firm, or even if you're a big firm, you're not avoiding anything. If this is what the industry is, you welcome it because you want to be the best in the business. And if you're dealing with myself, Lord Ibo Rishi Hards at IZ Corp Exchange, there is no, oh, we're just straddling the sideline. We try to stay away from the sideline. We don't want you on the sidelines, straddled and tiptoeing, looking good like, oh, I'm so smart. No, just play it straight, smash mouth it down the field, and you'll be fine. You know what I mean? You're going to make money regardless. The market's bull run. Real estate is going through the roof. Commercial real estate isn't going anywhere. Whether you're doing pig farms in Italy or you're doing house flipping in Miami, or if you're selling socks, buy one, get one free for homeless people, to raise money for homeless people and to better their community, you're going to make money. Especially if you come to the exchange, you're going to prosper. Rome It takes longer to build a castle than it does to build a doghouse. If you're going to build your business, or your business is already growing and you're where you want to be, then you really need to set a good example so other people will come into the industry. So even on the tax side, the implications of a fund manager and his proposal and his strategies is the most valuable information. So what the fund manager is saying, it needs to be clear, it needs to be understood, it needs to be, so when the investors or even the legislators or the overseers, they come in, you know what you're talking about, they know what you're talking about. That way you're protected. One thing people don't understand is that financial regulation protects the business more than it protects the customer. So when you're talking about financial reform, well, we're going to do all this for the banks. Sometimes the banks just get agitated. And the customers think, oh yeah, this is good. But what it is so the banks don't get the lawsuit. So nothing comes up. So if the wall breaks, if a ton of bricks is crashing off the top, it doesn't hit the banks. It protects the business before it protects the customer. You see what I'm saying? Because when you're too big to fail in the community and you're offering a service as such, you need to be safe so people can keep making money and investing money. If a few individuals come, and this is just a reality, a cold cut reality of finance. If you come in and the individual's not happy, fine. People are still going to need to invest their money. You're the one who's investing people's money. You're the one consulting. You're the one outsourcing, doing taxes. You're the one who needs to be protected more than the client, because there's more clients than you. You see what I'm saying? And you're into the too big to fail category. So, you don't sit back and be like, well, it's a liquidity issue. No, you set your rules and your regulations with your people, and they have to abide and follow by it. And the legislation and the regulation and the reform protects you when these people say, no, I didn't lock in for 5 years. I want my money now. No, you didn't tell me you're doing 4 and 40 or 2 and 20 on my return. Everything is written in stone, and the legislation protects you against that. If you have a decent track record and you're a good hedge fund manager, CORP Exchange would sit down with you and offer you a package where you could, if you're looking for advertising or advertising exposure, because we have a lot of people that come to us and they're interested in investing money. And to be honest with you, the least that I've seen over the last 6 months, which is like 35 individuals, just throwing some numbers out there, like caution to the wind, not trying to get some action, but the least amount of money is $50,000. People like, I need to invest some money. I have $50,000. That's the least I've seen or that I've heard about through other managers. If you're good, you can bring in the capital. You know what I mean? You can explain your strategy, and even in the given current market conditions, if there's a lot of distressed investments, for example, you can help these people and you can help your clients and establish a good relationship with them and move forward. So everyone's happy. If in any event the capital is available, the opportunity will present itself. You have liquid assets. You have debt. You have distressed debt. You have real estate is huge. I mean, over the last 5 years, just the last 5 years, actually the last 15 years, real estate has just went. It's just a whole new beast, especially in this part of the world. A lot of these things you need to, this is where the consultation comes in. You have to be able to explain to your investors, there's longer lockup periods, and why cash needs to be locked up longer term for a higher yield or a better return on investment types. But one thing we do want to emphasize, and I do want to emphasize in this 2022, this August 2022 HEJSPAN survey, which you'll be seeing a lot more, the surveys. They're just really Q&As, but we break it down into surveys, because when people see these, when they see these commentaries, and they read these commentaries, and they see the videos and whatnot, sometimes, a lot of times, the phone just starts ringing, and more often than not, people want to talk about, what is the taxes, what is my tax structure, because a lot of times now, especially, big business people with a lot of money, they don't pay any taxes. There's a lot of myths about taxes. It's where you're at. It's not where the tax world is. It's where you fit in the tax world. You might have $10 million, and your structure and your strategy is like this, and you will pay taxes on that. You might have $30 million, and your structure and your strategy is like this, and you will pay taxes on it. You might have $5 million, and your structure and your strategy is such, and you won't pay any taxes. So you just can't go by what's going on out there, what people are selling and talking about. So we focus a lot on the taxes. So this is just a small portion of the HEJSPAN survey. We look forward to hearing from anyone and anybody and anyone who's more interested in getting involved with HEJSPAN. The publications coming out. My name is Lord IBO Hearts. You're watching CORP Exchange Television, and this is a HEJSPAN segment, and we're looking at the HEJSPAN Survey 2022 August. Thank you, and have a blessed day. Goodbye.